Good morning, traders. This is Perry Woki with StartupTrading.com. It is Thursday, May 13th, 8:48 a.m. Eastern Time. So, looking at really where we've been, what's going on here, we'll look at it this way. But if we were to open up right now, we're going to open up right around 75. So we're going to open up in this node, right in here, right? If that's where we're to go. So easily we could get up to the previous low on Tuesday, which would be like right around 4104, and then you can see the overhead supply from this run up and that we've been stuck in on this node is really right around that 4104 to 4115, right? So what everyone's looking at is below 4037.5, which is this low over here, this gap that goes down. There's been no trading between the bells in this area down here. So everyone's thinking that we're going to go retest the gap. So what matters really longer term for me is as we come back down here, eventually we will trade in this area of the chart again, whether it's today, tomorrow, next week, or in 5 months, we will trade this area of the chart again. So as we look at, this is really the breakout over 4,000 as we've come up. So, we've had an aggressive 3-day drop. We could literally sit here and flag today or consolidate, right? We could just sit here and fill in trades in this zone between yesterday's low and probably up to 41.15 ish. I'm not going to get too bullish on anything. Once you clear basically 41.30, right? You will probably end up just trading up to 41.75. This would be the churn zone right in this area of the chart. And then above that, there's really nothing stopping getting to an all-time high. So what would be healthiest for the market, right, before we start heading back up, would be to fill in for a day or two and test basically down to around 39.72 to 39.50, and then get stuck in here for several sessions, and then maybe have another test down here, and then come back up here, and then churn through and go. And this whole process might take into July or August, right? That would be what's healthiest for the market, all right? Unhealthy for the market is if we end up short squeezing and making a new high over the next sometime this month without trading this area of the chart. That's going to be very unhealthy, right? And that'll probably end up feeding the end of this bull market, right? So these are signs that I'm watching for the end of the bull market, right? Do we do healthy things or do we do unhealthy things? So with that said, let's get into today's action. So we have that void that we're looking at, right? So you can see the bottom end of this zone is basically from right around where we settled yesterday. So you can look at the red or green on the chart right around 40.57, 40.58, right? Above, you can see this little nipple over here on the ES, right? Getting above that, there's that room, as I stated earlier, to get 4104, 4116, and then you start, churning up through, the mess that we've been in for the last, 4 or 5 weeks. Looking at the rest of the indexes, right? The Dow is the one that finally broke down yesterday, right? It finally lost. I'll go ahead and make this bigger for you. But the Dow is the one that really ended up breaking down yesterday. So it come back down to these lower levels. You can see there's a split in the distribution right around 33,200 that really separates this area of the chart, right, from the area. And we'll just do it like this again. You can see it really separates, this is a dividing line separating, all these trades, right, from all these trades. So the Dow is healthy, and basically because it went down here and it held this distribution, right? So keep in mind that below 33,000, and we won't get too wonky here, but below 33,000, right, that gets you in the other distribution, and above, let's just call it 33,300 are your splits. So there's about a 300 point, no man's land in there, and we'll see where it goes. So the overhead supply really kicks back in around 33,663 for the Dow. Looking at the Russell, the Russell is all just one big distribution here, right? And it's really fell from that 2275 again. It's come back down. It could make it all the way back down to it's under that 2175 now, right? So that was the 100-point range. That was a no trade zone. We never broke back out to the upside, right? So it could literally keep going until it gets closer to the bottom of this edge. I'm not going to call it, another 100 points down, but we'll see if we end up responding off this 2212, right? You can see how thin this gets. And in profile theory, when you end up seeing this, what you end up getting is people think because it's thinner, right, it's less basically, that there's less support. Believe it or not, there's actually more support the weaker this profile gets, right? Because think of it this way. There's less traders that wanted to trade here than wanted to trade here. So as you're coming down, you end up giving them another bite at the apple. You end up letting them get another test, and they end up executing those trades. So as we come back up, you can see, 2166 to 2175. That's probably resistance for the Russell. We already beat the ES up. Let's look at the NASDAQ again. So 13,170 is going to be a little bit of a zone, and you can see we had those lows that were right around 13,080, that were in there before. You can see that resistance in the overnight session was right there. And one thing I will caution you about, right? You can go to your studies, you can edit, you can highlight the extended sessions, right? Do not put as much weight on the whatever happens in the extended session is what happens between the bells, right? There's a lot of time that passes by that happens in the extended session, the Globex session before the opening bell, but it's only about 20% of the trading volume. So you should only be putting about 20% of the weight of what goes on in that area, right? A lot of times the Euro traders, the Asian traders, other traders, right, they're looking at key levels. They're nice, but there's not a lot of volume that goes off. There's not a lot of price action. So think about that. Should really only be about 15 to 20% of what goes on, and then 80 to 85% should be between the bells. So looking at the overnight action, 48 points. We could go down to 3,900 or up to 4,214. I don't think either of them are really on the table for the day. But if you look at really what would be healthy, so we've come back into that gap right below 37.50 on the ES in the overnight session. We've come back out of it, right? So, literally we could short squeeze up today and not test this gap again. So that's the title of my video, retest or short squeeze. So if we get down there, right, we'll just have to watch the market's reaction, play the sequences and whatnot. But you can see right around yesterday's low, 40.51, that's going to be a demarcation line, right, for the bell traders. And then you got the overnight low. And then one place that we could get a response from in between there is right around 4,011 to 4,015 quarter if we end up getting down there. Staying above 40.75 to 40.80, which is, ironically the area we're stalling at right now, would be a little bit of a tell. but you can see we've got that overhead supply. All these traders, right, well, not all of them, but a large majority of them want their money back, right? They were sitting up here for a month, and that's going to be overhead supply. So that should churn, right? So one of my sayings is, if what should happen in the market doesn't happen, expect the opposite to happen with equal force and magnitude. So we'll see. Now, looking at the profile in a little bit more depth from yesterday's action, the NASDAQ had single prints or a split distribution between 13,121 quarter and 13,122.50. So just remember 20 to 25, 13,120 to 125. That area really breaks the lower part of the distribution from yesterday to the upper part of the distribution. And there's not a lot of trades that went off above that yesterday. So all of the rest of the markets had many distributions. Each one of these sets of red lines was a distribution. So, the NASDAQ is the easiest to read. Now, if you look at the Russell, we'll just look at the top box since they're so close, between 2153.30 and 2156.5, right? That's your above or below line pretty much. And then we'll go ahead and focus just on this top box, and that gets you right around to where I was saying. You get that 41.10 quarter to 41.12, so right around that 41.15 area, right? Above there, we'll see if there's just failure if it does get up here. But if we do not get that retest this morning after the bell rings, right? If the institutions just don't want to sell, right? If they want to come in and buy the dip, look for all these markers from yesterday's action to get repaired, meaning that they're going to trade through again. And then we'll have to see after they get traded through. This could just be a bell to bell, up. Yesterday was a bell to bell. We ended on the lows. The Dow ended up making fresh lows after the session close, the Russell did, but that was it. And then, today could just be straight up and with nothing, no relief for the bears as potential, right? We'll see when it ends out. And then tomorrow we could come back down. We did this about 3.5 weeks ago where we had a day down, a day up, a day down, a day up, and then it just went back and forth. It was a game of keep away for the entire session. So today could end up being a short squeeze for those overnight traders and for yesterday's traders, right, that went out short. So we'll just have to see if that comes into play. Keep in mind that that is on the table for the day. We'll be watching the overnight value areas to see if we get anything going right above or below. Right now, since we're up near overnight highs, that would be a little bit more of a tell. The Dow is a little bit farther from that overnight high than the other three are. You guys have a great day, and I'll talk to you tomorrow.